Okay, now that we talked about the four methods, let's talk about other things that impact food or beverage cost. Those things that we transfer in or out of the kitchen or the beverage department. Let's start with cooking liquor. So this would be a transfer in to the kitchen. So if we're going to cook with liquor, wine, sherry, brandy, whatever it is, we transfer it to the kitchen from the beverage or bar. That means we, as the kitchen, own the value of that liquor. It now falls under food cost. You would do that with any alcoholic product that you're taking from the bar to cook with. So think of veal marsala. Yes, we include the veal, the mushrooms, the oil, all the other ingredients, but what about that cost of marsala? So if we took a bottle of brandy from the bar into the kitchen, we have to transfer the cost of that bottle of brandy from the bar or the beverage department to the kitchen. So at the month end, that bottle of brandy is accurately reflected no longer in the beverage department or the bar value, but now it's part of the kitchen. It's part of our food cost for the month. So we're transferring that in. Now let's talk about transferring food to the bar. So this would come off of our food cost and go to the beverage cost. So all food transferred to the bar for the production of beverages or products for sale should no longer be part of food costs. So look at the pictures. Lemons, limes, oranges, cherries, celery, olive, a shrimp in this glamorous Bloody Mary type cocktail. All of the value of those food products would come off our food cost and be part of beverage cost. Now let's talk about promotions. Once again, this would be money coming off of our food cost and going into a marketing or promotions account. When we talk about promotions, we're talking about food given to an event, taking food and going on a radio show for the host can taste your food, or a podcast so they can promote your restaurant. A bridal shower, a bridal show to increase sales of bridal showers or wedding events. Anything that you're using to promote your restaurant, and if you're giving away food products, should come out of food cost and go into the marketing or promotions account. Remember, the purpose of promoting your business or giving money to charity events is ultimately we're in business to make money. So we want these opportunities to increase our sales. So hopefully if we donate money to a charity event, we get some goodwill, get some good press, and people come to our restaurant to eat, increasing our sales. Same with, once again, those promotional opportunities. The whole purpose of promoting is to get business in. Charity and donations is to be a steward of the community, giving back to the community, but ultimately as a business owner, we're hoping it increases our sales. Wedding promotion shows. If we have and spend $2,000 worth of food for the marketing purposes, and we don't get any money in return, we don't get any sales. Once again, we're hoping this increases that people come to our venue and book weddings, book events, come to our restaurant. So we want to take the cost of the product being used to promote or for a wedding show or given to a charity. It's going to come out of food cost and go into marketing or promotions. We hope that we get a great return on investment. But what about comped meals? Same thing. Remember, when we comp a meal, we're not getting the dollar value of that meal. It's going in the trash most likely. So we want to account for comped meals as well. So we would also keep the value of these meals aside and make sure that we're deducting them from food cost. And we know that when we talk about comped meals, they're not a good thing. It means someone made a mistake. It means the server didn't pay attention. It means that the customer didn't clearly talk to the server about what they wanted. They changed their mind, whatever it may be. So we don't want to be comping meals often, but when we do, we want to account for them. Also, when we do promotions, we want to make sure that we're accounting for all the cost of food, and it comes out of the food cost and goes into the marketing or the promotions account. And remember, when we've done the income statement, you've seen these categories as operating expenses. And now we're diving deeper into what would be part of those categories when it relates to food and beverage cost. Steward sales. So stewards are in our industry typically a name for the person who's in charge of dishwashers, the housekeeping and house setting crew of banquets, those sorts of things. But when we talk about steward sales, let's pretend that you own a restaurant and that one of your friends wants a box of shrimp. So what you would do is buy the box of shrimp, like the normal order that you would get with the box of shrimp. And let's say it cost you $40. And the supermarket would cost your friend $100. So that's why your friend's coming to you. Hopefully you don't have a lot of friends like this because you're not their supermarket, but let's say you have a close friend or relative and you want to help them out and you have the ability to do this. We call this steward sales. So you get the shrimp for $40. You give it to your friend, family one. They pay you $40. Everyone is happy. But you don't record that $40 as sales. You're taking that $40 to cover the cost of that box of shrimp. So $40 doesn't go to sales. This is a separate transaction to account for the cost of the product. So it's not showing up in your food cost. It's not showing up in your sales. It's showing up as a steward sale. It goes to pay the food bill. Doing this method and using steward sales, in this method, it never shows up in your food cost at all. But once again, we're not people's supermarket. We don't want our friends, family, and loved ones coming to us to buy celery, carrots, shrimp, tenderloins, etc. So you'd want to use caution by using this method, just because it does take labor to buy the product, to give the product to the person, to get the payment, distribute or cash the payment, the Venmo, whatever the payment method is. So there is a little bit of labor involved. So next we're going to talk about gratis to the bar. Gratis means free, something for free. So in a traditional restaurant, when you get that rolls and butter on the table, we consider that gratis to the customer. It's free to the customer. It costs us money to give it to them, and hopefully we're building that in our menu pricing or using our Q factor, those types of ways to account for it. But if we're giving food to the bar for, say, happy hour, or there's a time of day that we give food to the bar to attract customers, we want to make sure that no longer is on our food costs. So we want to transfer the cost of that product out. So food transferred to the bar and not used in the cost of producing beverages still gets charged to the beverage department because they're using it to generate sales. Anything that we give them, free appetizers, a small chafing dish, bar sales, when we're buying those salty snacks and nuts and chips that we put at the bar, we bought them as food purchases, but then we had to transfer them to the bar as a bar purchase. So it gets transferred to the bar. And none of those have a dollar value. People aren't buying these food items. They're given to the bar for people to eat, to generate more bar sales, but also to help people not get intoxicated. There's a legal reason for it as well. But let's just think of the reason of having more sales. We give it to attract people to the bar, to have more beverage sales, but also to make sure that they are consuming food and not getting intoxicated. So this should look familiar. We've talked about it the last 2 classes plus today. We've talked about it for the first half of the semester. This is the top part of the income statement. Hopefully by now you've memorized this formula. Beginning purchases, beginning inventory plus purchases gives you total food available for sale. Total food available for sale minus ending inventory gives you cost of food consumed. So look, we've changed it to cost of foods consumed. Remember, we've been using cost of food sold up until now. Let's look at an example. Beverage inventory at the start of the month was $7,800. We bought $28,000 worth of product. That gave us $35,800 for beverage products available for sale. We had an ending inventory of $8,400. That gives us $27,400 for cost of food consumed. And once again, in the next class, we'll explore much deeper on consumed and cost of beverage or food sold. But of that cost of food consumed, we now have to take additions and subtractions to that cost. So when we talk about the monthly food cost, if our cost of food consumed for the month in food was $27,400, but we transferred in $120 worth of cooking liquor, we transferred out $210 of food to the bar, we transferred out $100 for some sort of promotional activity, we have to account for all of that. Then a friend asked for $50 worth of product. We use Stewart sales to account for the product, getting the product. It was a wash. We didn't record our sales. We didn't record the cost. Gratis to bar. So we're transferring $200 worth of food to the bar for the gratis products that people at the bar can eat for free. When we look at this snapshot and we see that for the month with adjustments, and we can consider these adjustments, we had the one addition of the cooking liquor, the other 4 were subtraction. We had started with $27,400, but now we have a cost of food of $26,960. But wait, we forgot about the employee meals. Let's account for them. We had $648 of employee meals, and we could have used the per meal period method. 216 times $3 gives us 618. So that means that our cost of food sold is now 26,312. We started with 27.4. We got it down to 26. Sorry, I'll go back to that slide. We got it down to 26,960 with the additions and subtractions. Then we took employee meals into account, and now we're to 26,312. So this is a more accurate cost of food. Think about 2 classes ago when you did the spreadsheet with the cost of sales, the sales report and the inventory report. That inventory report and that cost of sales report, the discrepancy was because we didn't take all the additions and subtractions and account for employee meals. So I'm hoping it's starting to make a little bit more sense on why that activity, there was a discrepancy. And now taking into account of all the things that can impact, we're just doing food costs right now, but could impact your food costs because we're bringing liquor in or transferring food out, using Stewart sales, promoting and getting the taking out the money that we use to promote events, etc. So ultimately, because we brought the food cost down from the 27.4 that it was in the previous slide, down to 26,312, and our food sales are 78,000, our food cost would be 33.7, which would be the 27,000 divided by the 78. And then with adjustments, our food cost with adjustments, without adjustments, our food cost would have been 35.1. You would much rather want the 33.7 if you're responsible for food costs than the 35.1. That's it on today's lecture material. Up next, you're going to do the homework assignment.